What's up guys, I'm back with a new housing market update. I've been a little MIA recently because I just bought a new house. I've been renovating it completely inside and out, so I'll have more on that in a future video. But today's video, I'm going to be focusing completely on what's the latest information with the housing market. Now there have been some significant changes going on since the last video I made on this topic, so there's a lot to unpack in this video, between interest rates going crazy, between house prices hitting their all-time highs, bidding wars galore. I'm also going to tell you at the end of this video exactly what I think is going to happen with the housing market over the short term and the long term, so stay tuned to the end of this video to make sure you don't miss out on that part. But before I break this down, definitely smash that like button, and if it's your first time visiting the channel, I buy rental properties and flip houses, and I teach you guys how you can do the same thing, building massive wealth for yourself. So if any of that sounds interesting, I also touch on personal finance topics as well. If any of that stuff sounds interesting, definitely subscribe, hit that notification bell, and with that said, let's jump into it. The housing market is getting hotter and hotter, and it's hard to believe because back in February, it was already a really strong seller's market, and now here we stand at the all-time low in terms of inventory. It's insane what's going on. People are offering over ask. That's just a basic requirement now. And then in addition to that, people are waiving their appraisal contingencies. They're waiving their inspection contingencies. They're getting a little reckless, if you ask me. In my market of Phoenix, Arizona, there are people offering over $100,000 over ask sometimes just to win the deal. It's just nuts what's going on over here. And in Denver, there were reports of people offering $90,000 over ask and $100,000 over ask, and they still lost. So that's kind of where we stand as far as today's market. This ultra low inventory is causing housing prices to go up at a rate that we haven't seen in years. So because of this, I want to go straight to the data. Redfin tells us that the latest information they have is that year over year, prices are up 18.6% for price per square foot. Now that is the nationwide statistic, so if you look at some metro areas, it's actually higher than that. Phoenix housing prices have gone up 22.6% year over year, and not only that, but they've actually gone up 10.5% just from the beginning of this year. So that's just what's going on in Phoenix. But if you go over to Austin, Texas, housing prices are actually up 37.5% year over year, and over in Boise, Idaho, which is actually the hottest market right now, it's up 37.9% year over year. This is just insanity. In addition to that, median days on market nationwide is as low as 23 days, which is 15 days less than it was same time last year. That's just over 3 weeks. Think about that. And then on top of that, 58% of homes, 58.5% of homes, are going into escrow 2 weeks or less. So that's actually a 19% increase from last year's same time. Now we've talked about this ultra low inventory, but exactly how low are we talking about? Well, nationwide, we're sitting at 7.4 weeks of inventory, which is just absolutely insane. And then on top of that, Phoenix market is currently sitting at 5 weeks of inventory. If you go to Seattle, they're sitting at 3.7 weeks of inventory, and the Denver market is as low as 3.1 weeks of inventory. So basically, the housing market is on fire, in case you haven't noticed. But aside from that, we got to look at other factors that can also play a huge role aside from the supply and demand area, and that would be things like mortgage delinquencies, unemployment, but also looking at things like interest rates. But let's start with mortgage delinquencies. Well, as of right now, everything regarding delinquencies and forbearance is actually looking really good. It is continuing to go down. Mortgage forbearances are going down month over month. Mortgage delinquencies went down over 16% over the last month, which brought it down to just 5.02% of total mortgages in delinquency. Now, what you have to be careful of is there still is the foreclosure moratorium that's in place, and that's kind of putting a lot of people on pause as far as getting into the foreclosure area. But as I've stated multiple times on this channel, there is the situation where people have a lot of equity in their homes because of all this price growth, and a lot of people that may be facing foreclosure won't need to face foreclosure because they can just sell and have other options at their disposal where they can avoid avoid the foreclosure because of all the equity that they built up, and that just continues to get better and better for those homeowners. In fact, the last stat I saw a few months back was that only 1/10 of the delinquent people would not have enough equity to be able to sell their house and avoid foreclosure. So most people could get out of it no problem by just selling their house or refinancing or something like that. And now, since then, a few months ago, we've seen even more price growth. So I'd imagine that that 1/10 number has gone down even more than that. So personally, I don't believe and I don't see it happening where this huge foreclosure wave is going to come and cause this massive housing crisis. I just don't see it happening. Now, as far as unemployment goes, we've been continuing to see the unemployment rate go down. Right now, it's currently sitting at 6%, which is down from 6.2% last month. And just generally over month, we've been seeing that rate continually go down. In fact, Goldman Sachs recently announced about a month or two ago that they believe that by the end of 2021, we'll be looking at a 4% unemployment rate. Well, since then, we've been seeing a lot more confidence in the US economy, and because of that, we're starting to see US Treasury yields go up, and that has an effect eventually on mortgage interest rates. So with all that optimism, do I think the prices will just continue to go up forever? Absolutely not. There are potential roadblocks in the near future. The biggest of them all is interest rates. So with that said, we definitely want to keep an eye on what's going on with the 10-year Treasury rate because that plays a huge role in mortgage interest rates. And what we've seen is that in January, we were at about a 1% rate, and then in the end of March, it went to as high as 1.75%. Now that was the same time that mortgage interest rates went from about 2.7% all the way to about 3.3%. So we saw just over a 0.5% increase. So not only have housing prices been going up at an alarming rate, but also interest rates have been going up with them, which means buying power has been really going down in so many different aspects between interest rates and housing prices going up. But with that said, the Fed has made it their mission to keep these mortgage interest rates low, at least for the meanwhile. And what we've been seeing recently is that even though we hit this peak in interest rates back at the end of March, we're starting to see a trend going down again. So I don't know how long this is going to go for. Long term, interest rates have to go back up again. I mean, it's not going to stay here forever. It's definitely a temporary thing. And when that happens, you want to really see what it can do to buying power. So if you had a $250,000 mortgage over a 30-year period at a 3% interest rate, you'd be looking at a $1,054 a month payment. Now, if you up that by 1%, and now that 3% is now 4%, that changes to be $1,194. But with a $500,000 mortgage at 3%, you'd be starting at $2,108 a month. And if you increase that by 1% to go to a 4% interest rate, now you'd be at $2,387. So you can see that as you increase the amount, you'll start to feel the difference even more. And finally, with a $750,000 mortgage at a 3% interest rate, you're looking at a $3,162 a month payment, and if you upped it by 1% to a 4% interest rate, now you're looking at $3,581 a month, a much bigger difference with the bigger amount of a mortgage. So overall, interest rates, you can see, can play a massive effect in changing the way of the market. If people can only afford so much and it changes by hundreds of dollars, they can get priced out of the market pretty easily. But with that said, currently we have that record low inventory. The economy's coming back in place. There are so many positives coming right now as far as the housing market and the economy as a whole that I truly believe we're going to see some massive growth in 2021. And not only that, but I feel like in some of the states that a lot of the people are migrating to, we're seeing people leave California, leave New York, and come to places like Phoenix, Arizona, like Austin, Texas, like Florida. Places like that are going to see some massive booms, not just in numbers coming in, but also in housing prices. I think they're going to go up so much, and we've already seen that happen so far. So overall, I really see the likelihood of a housing crash happening this year as a very low probability. And honestly, if things keep going the way they're going, if the inventory stays low, if the interest rates don't go up too much higher, this really could be the beginning of a housing boom. So anyways, that's my take on the market right now. I hope you guys enjoyed this video. Be sure to smash that like button and also subscribe and hit that notification bell to stay tuned for more videos like this. Also, let me know your thoughts in the comments below. Let me know what you think is happening with the housing market. Do you think house prices have peaked? Do you feel like a housing crash is on the horizon? Let me know your thoughts in the comments down below. Lastly, follow me on Instagram at the Out of State Investor. Thanks again for watching, and I'll see you on the next one.